So you've spotted it. The perfect piece of equipment at an auction. The deal that could absolutely transform your business. But, here's the catch. You've got to pay for it, like right now. So how in the world do you get the financing lined up before that amazing opportunity just vanishes? Well, in this explainer, we're going to break down exactly how to fund your next big auction win right here in Canada. Okay, so here's the classic problem for pretty much every entrepreneur, right? You find this incredible deal at an auction, but it has a really short fuse. Most auctions are going to demand payment within 5 to 7 days. Meanwhile, your traditional bank, yeah, they're moving at, let's just call it a leisurely pace. Their approval process can take weeks, and that's time you just don't have. So that's the big question, isn't it? How do you bridge that massive timing gap? How can you possibly move at the speed of an auction house while still getting the financing you need? Well, that's exactly the problem we're here to solve today.
All right, let's dive right in. In the world of auctions, you have got to remember one thing above all else. Speed is everything. And I mean it. It's not just some nice advantage to have, it is literally the secret weapon that's going to land you the deal. Okay, think of this like a tale of two different lenders. On one hand, you've got the big traditional banks. They can be slow, there's tons of paperwork, you know the drill. But then you've got specialized lenders. These guys, they live and breathe in this fast-paced world. They are built for this. We're talking about getting credit approvals in just a couple of hours and getting the funds sent straight to the auction house in as little as 24 hours. Now that is the kind of speed that wins bids. So you want that kind of speed, right? Of course you do. So how do you get it? Well, it all comes down to being prepared. You have to do your homework before you even think about placing a bid. Let's run through that pre-approval checklist. First things first, the lender needs to know exactly who you are. This is kind of the foundational stuff, but it is so important. Your legal business name, your operating name, your business number, and of course, proof that you actually own the company, like your articles of incorporation. Just getting this stuff together up front is going to save you a huge amount of time and back and forth later. Okay, next up, you've got to show them you're financially healthy. Lenders are probably going to want to see, say, 3 to 6 months of your business bank statements to get a feel for your cash flow, plus a couple of years of tax returns to see your financial history. And a solid business plan? That's also key, because it shows them you have a vision for growth. Right, now we need to talk about the asset itself. The lender needs all the details on exactly what it is you're buying. So that means getting a formal quote or an invoice from the auction. You'll need all the specifics, the make, the model, the year, the serial number, the whole shebang. And hey, if it's used equipment, clear photos and notes on its condition are absolutely essential. The more detail you can give them, the better. And this right here is a total pro tip. Seriously, don't just tell them what you're buying, tell them why. Just a couple of clear sentences explaining how this new gear is going to make you money, by boosting revenue or cutting costs. It can make a world of difference. It gives the underwriter who's reviewing your file so much more confidence, and that's really the name of the game. Okay, so you did all the prep work, you placed your bid, and you won. Yes, congratulations. So what happens now? Let's look at the nitty-gritty of actually financing that amazing win. You see, this is where all that homework you did really pays off, big time. Once you win, that clock is ticking, and it is ticking loudly. But those specialized lenders, they're ready to go. You send them the final bill of sale, and bam, they can often get the money to the auction company directly, sometimes within just 24 hours. That incredible speed is what seals the deal. So let's just walk through the whole thing step by step. It all starts when you contact a lender with your budget. They approve you and give you what's called an auction line of credit letter. Think of that as your golden ticket. It lets you bid with real confidence. So you go, you win your equipment, you've got about a week to pay up. No sweat. You just send the auction's bill of sale over to your lender, sign the final financing docs, and they pay the auction house directly. It's a clean, simple process that takes all the stress out of it. Now for a quick peek behind the curtain at the legal mechanics of all this. Once the deal is funded, the lender needs a way to legally secure their investment in that equipment until the loan is all paid off. Let's see how that actually works across Canada. So in most of Canada, the tool they use for this is called a PPSA lien. The easiest way to think about it is like a public notice. The lender goes in and registers a legal claim on that specific piece of equipment they financed. This registration makes their security interest public and, more importantly, legally enforceable. And here's what that actually looks like in the real world.
This is the official online portal where it all happens. You can see it right there on the screen. Status complete. It's all done digitally these days, which makes the whole thing super clean, efficient, and transparent. Now, a quick heads up for all of our entrepreneurs in Quebec. You need to know that the legal framework there is unique. Because of its civil law system, the terms and the specific legal acts are different from the rest of Canada. So, in Quebec, instead of a PSPSA lien, lenders use something called a hypothec. I know, it sounds a little complex, but don't let the word throw you off. It's really just a different name for the same basic concept. It's a legal charge that gets placed on an asset to secure a loan. Different name, same function. So let's just put them side by side. The rest of Canada uses a PPSA lien, which comes from common law. Quebec uses a hypothec, which is from its civil code. But here's the crucial point for you, the borrower. The end result is exactly the same. In both systems, the lender's investment is legally protected, and you get to put your new equipment to work. That's what matters. Okay, we are on the home stretch. You've won the bid, you've secured the financing, the legal work is all done. But before you can finally take your new equipment home, there's one last little detail to think about: taxes. So who's actually responsible for the GST or HST? Well, according to the Canada Revenue Agency, it's the auctioneer. They're legally considered the seller in the deal, so it's their job to charge and collect the tax. And remember, that tax is applied to the final hammer price plus any buyer's premium you have to pay. It's also worth knowing that some specific goods, like maybe farm livestock, can be zero rated, which means 0% tax applies. So what's the bottom line here? Winning at an auction isn't about getting lucky, not at all. It is all about preparation. When you understand the financing process, get your documents in order ahead of time, and partner with the right lender, you're not just bidding on equipment, you're making a smart investment in your business's future. So there you have it. You now have the playbook for financing your next auction win. You know how to move with speed and how to bid with confidence to get the equipment that's going to take your business to the next level. So, the only question left is, what deal are you going to go chase next? You ready for it?